Welcome to today's webinar discussing our global tax management benchmark research, hosted by SAPinsider and presented by Vertex. I'm Ogo Nwanyanwu, Research Director for SAPinsider, and I will be your analyst for today. We have just a few announcements before we begin. Again, this webinar is designed to be interactive between you and the presenters. After the presentation, we will take roughly 5 to 10 minutes of this webinar to host our live Q&A session. We invite you to submit your questions using the Q&A box located on your control panel. We will try our best to get to as many questions as possible within our scheduled time. A copy of today's presentation will be available for download in an email following today's session. Now to our presentation. In terms of today's agenda, we're going to start with webinar panelist introductions. Then we'll move to the research overview and survey snapshot. That'll be followed by an exploration of the global tax management research insights. And finally, we'll end with a live Q&A. Joining us today to, again, discuss and explore this exciting research regarding global tax management, we have Michael Bernard and Peter Boerhof. Michael is VP of Tax Content and Chief Tax Officer of Transaction Tax for Vertex. Peter is a Senior Director for that and Chief Tax Office at Vertex. Welcome, guys.
Thanks, Ogo. Happy to be here.
Thank you very much. So
let's talk about this research. So in terms of, again, the audience that we have for this research, you look at the region of operation for the organizations that really joined our survey. It was broad, right? So 61% originated from North America in terms of their region of operation, in terms of the jurisdiction they're considering when they think about their global tax needs. We see that 41% are from Europe, another 40% from APAC region, 26% from Middle East and Africa, and then 32% from LATAM. So you can see that we have broad representation in terms of the challenges and the jurisdictions that organizations that responded to our survey are concerned about with regards to global tax management. You also see that represented in the size of the companies. We saw about 23% of organizations with over $10 billion in revenue, another 19% between 2 and 10 billion, again, exploring, and we see that the enterprise organizations are able to share their insights here. And then we also have representation with regards to mid-market. So if you think about 200 million to 2 billion in terms of annual revenues, that also saw representation within our survey. Now, when we think about, again, the roles and responsibilities of the respondents, many are from IT and finance. If you look at those that responded, said they were part of the IT roles or responsibilities, we were at 58%. Many of these individuals are VPs, directors within the finance departments. They just lead the IT function for those organizations. We also had, in terms of pure finance respondents, another 30%. So in terms of the representation here, we have, again, a strong representation within the finance and tax community. But again, this survey was weighted towards those with an IT alignment with their role. In terms of industries, software and technology was the leading industry with 35% of respondents from the software and technology space, followed by 21% from industrial and manufacturing. Now, in terms of this year's survey, again, this is the third year of the research. And what we've seen from this research is that organizations are challenged by the dynamic environment for global tax compliance and the regulatory environment they are navigating. And so this year, in terms of the impacts that are affecting tax teams, corporate income tax was the #1 impact to tax teams. That surpassed sales and use tax compliance and VAT compliance, as well as e-invoicing and real-time reporting mandates. These four have represented the top 4 impacts, regulatory impacts within our survey over the last 3 years. But this year we see corporate tax emerging as a top challenge for our teams, our tax teams within SAPinsider. Peter, Michael, I wonder if you guys could speak on kind of the dynamism of the market, the tax compliance market.
So Peter, do you want to go ahead?
Yeah, that's perfectly fine. What stood out for me in this graph basically and in these results is a serious decline of, let's say, the VAT and GST compliance. I'm focused on the VAT part, so that triggers my attention. But I think there is a correlation, a direct correlation with the, let's say, the e-invoicing and direct reporting, real-time reporting trend as well. And from, let's say, the VAT perspective and all the discussions and developments that you see happening, this is really an impactful development around tax compliance, the increase of real-time reporting and e-invoicing mandates. That's top of mind of many tax and indirect tax people. So I think the decline in VAT and GST reporting is directly linked with the e-invoicing. But what surprised me a little bit is, let's say, the numbers around e-invoicing and real-time reporting, because if you look at the countries that have regulatory changes around e-invoicing, the response does not completely match up with what countries overall are doing. Because in 2021, there were 11 countries having mandate adjustments. In 2022, where the spike is, there were only 8. And in 2023, it's a little less than in 22, there are 6. So it does not completely match up. I would have expected more of a spike in 2021 as well. But it'll be interesting to see what next year's results will be, because around 12 countries have planned adjustments in this area for the coming year.
Just one thought I had. I want to comment on the graph. This would be 4 from the right. So if you look at the right-hand side of your slide, and it deals with audit defense, that's been building over the last several years, and that really resonates with me, because if you think about, as a survey was done back in March of 2020, a lot of governments just were either giving waivers or they weren't in their normal audit cycle, and they kind of continued that for the last couple of years. But that's all changed within the last, say, 12 months, because now auditors are out there, they're opening their audits back up, and they're being very aggressive. It's a very different tone than, say, what it was back in 2007 to 2009, when we came off of a downturn in business. And a lot of times what countries, or here in the States, they were actually selling audits very quickly in order to get revenue. Now that's kind of changed with the pandemic, because they see the level of activity of purchasing that actually occurred during the pandemic. There was a lot of government relief. Consumers got money, businesses got money. So I would say, if there's one thing you kind of want to be aware of, particularly over the next 2 years, is that the audit activity will pick up. Auditors will be more aggressive, and it will be different than it was in 2007, 2009, where they will not settle just for the sake of getting some money in, but actually to enforce the laws, particularly as it relates to e-commerce. So those are some thoughts there.
Thank you. I think we're seeing a reflection of that throughout the survey. So in terms of pain points that are represented within our survey, control and governance challenges saw an increase going on the third year. So it was 28% in 2021, 45% in 2022, and here we see it's up to 51%. So, I would like to just start there with any comments, just in terms of, what you guys are seeing or thinking in that area.
Mike, you have any thoughts?
Yeah, I do. I think one thing that has happened historically over the years is that income tax has been the focus of controls around the environment and how you report that, those numbers, effectively your effective tax rate. And then if you're a public company, obviously having a tax footnote. So that's where a lot of the emphasis has been. But lately, not just the regulators, but more so the accountants have focused more on what is going on in the indirect space. And principally, a lot of people say, well, you take money in and you remit money out. And so, why are they concerned with that? And I think what they're concerned with, they being the auditors, is that the amount of money that's moving through, the different platforms you may be on, and the speed with which all of that is happening. And so what I would what I would say to a lot of folks on the webinar is you should really have all of your controls kind of written down. If they're not written down, they don't exist for control purposes. So we've seen a lot of that happening with auditors. And what I would say is normally you can get those controls written down either using your internal audit function, or you can write them, or the IT folks can write them. There's a lot of folks who can contribute to that. But that would be something I would encourage you, particularly say if you could take some time over the next 6 months or something, if you don't already have those controls down and written. The other thing it does too, it helps you with your funding. So it kind of identifies gaps in your process. If you have some manual processes and you want to automate, if you've got that information really available when it comes to funding time, that's always a good story to actually present to those that are responsible for giving you funding in your IT environment.
And Peter, I would love for you to comment on the second pain point, ERP and application integration with the global tax engine. We see that as a consistent challenge to SAPinsider organizations, specifically over the last 2 years.
That is a challenge because traditionally tax engines, excuse me, tax engines originate and from the US, where it's obvious that there is a need because of the complex tax rate landscape with the different levels. And traditionally, if you look at Europe, but also the non-European countries, basically all the indirect tax determination and processes are embedded in ERP, and primarily SAP if you look at Europe. And that's the overall line of thinking, both in IT management and also in finance management. So the finance and IT leaders basically have the position of, okay, we take care of it in ERP because that's what we've done for decades. And now you see, let's say, a globalization of commerce, the speed of commerce increases, but you also see a speed in reporting because of the mandates that I referred to earlier. And there is a need now for, let's say, more up-to-date content. And now the challenge basically arises that people that are in this end-to-end indirect tax process from a global perspective, they need to sell the story that ERP, traditional ERP, may not be sufficient going forward. So they really struggle with the business case, selling that story, and basically debating the status quo that has been around for decades. So I see that as a huge challenge.
And what we'll see as we move through the research is that the demand is there, the interest is there, the need is there. It's the successful implementation and the challenge to integrate that we see reflected in our research. In terms of SAPinsider, we ground all our research in our DART methodology. Again, that's drivers, actions, requirements, and technologies. And so with regards to our global tax research for 2023, here's a high-level view of that DART model framework. And again, we will dive into each area and understand really the trends within the specific model. But I wanted to provide a high-level view. And Peter and Michael, I'll give you guys a chance in the subsequent slides to kind of comment in these areas. So starting with drivers, we see that growing complexity in compliance management and governance and regulations emerged as the top driver impacting how organizations approach their strategy with regards to global tax management. That's, again, that was number one. Digital transformation of tax and finance. This was number one last year. It declined a bit to number two. And again, that was followed by the need to improve accuracy and reduce complexity around indirect tax determination, as well as those organizations thinking about their growth and expansion strategies and how tax is really a core part of that approach. And so, I'll kick it off to Peter. Maybe you can speak about, the growing complexity and compliance and the increase there, right? Because maybe this speaks to what you're talking about in previous slides.
Yeah, absolutely. It's ultimately it's an integrated story. So kind of a lot of the themes that we discuss and a lot of the reasoning basically boils down to a number of factors. But one of the things that you also see in business and in compliance management is a globalization of, let's say, the commerce activities, while at the same time more centralized business operations and centralized controls. So the result of that is that tax and finance departments, they are confronted with a much more diverse transactional tax landscape than a couple of years ago, where we had compliance management and tax management within a country. That's where the compliance was managed. And then for some reporting, it was moved up to headquarters. But now tax in an end-to-end responsibility, they face a much more diverse landscape.
And Michael, we'll talk about digital transformation of tax and finance in the next slide, as that's addressed there in terms of strategies and actions. But where I wanted to take your attention is to addressing increasing global tax requirements from revenue authorities, right? This gets back to, the audit conversation we were having. And so, again, this confirms that kind of the assessment you were making earlier.
Yeah, I'll go. I mean, I think I'm focused on the second from, if you look at the left-hand side of the slide, the second from the left, where the digital transformation. Just a very brief comment. I think at the start of the pandemic, one of the things that did not exist was the digital tax office. And so a lot of companies made investments around that. What does that mean? Everybody could work from home. They were connected to a central network. They could access systems that traditionally could only be accessed on-prem. And that's all moved now. That was accomplished essentially within the first year. Companies did a great job. But now it's just trying to squeeze even more efficiencies out of the system. So obviously moving to S/4HANA, trying to have tools that are, as Peter spoke to, work in a more global, universal environment. That's been an emphasis as well. And then also just trying to make sure that you have the best tools, because one of the things about tools is if you have poor tools, it also affects the retention of your employees. So working on current, very automated, very efficient systems is really important, just for the people who are in IT that may support you or embedded in your department, or for tax professionals themselves. So kind of, it's key to stay on top of the technology trends for sure.
And then, as Peter said, these are integrated drivers, right? So as the complexity increases around compliance, the role of the tax officer and the tax team grows more strategic. And the need for digital transformation is apparent because, again, you want your tax team focused on these more strategic opportunities and not the mundane data collection aspects.
Absolutely, yes.
And so that speaks to, again, the actions that organizations are taking to support their global tax management strategies. Again, we see it starts with utilizing capabilities within SAP S/4HANA to minimize errors that can occur from manual processing. Second, and tied for number one, is improving tax controls and insights through advanced analytics and reporting. So again, you see organizations leveraging tools to become more efficient so that tax teams and tax professionals can be more strategic.
Yeah, Ogo, just a comment here. If you look at the first three areas, moving from left to right, what you can see is there's a lot of investment going on internally with companies who feel like they have core competencies to do a lot of this work, and they feel like they have excellent tools to actually achieve that. That was a very different story if you even look back about 20 years, because on the very right-hand side of this slide, where there's still some outsourcing going, but it's very, very small relative to what you saw a number of years ago. And I think with the advancement of the tools that we have and the knowledge that IT professionals and tax professionals have around those tools, that's led to this enormous growth and investment to actually pull these things internal into your organization. And that's kind of what we've seen over the years. I don't know, Peter, I assume that resonates with you as well.
Yeah, it depends very much on, let's say, the status of the company in this overall transitional journey to, let's say, an integrated, automated as far as possible tax process. Because outsourcing, as you indicated, Mike, it scores very low. But for some businesses that are at the start of the journey, it might even be an excellent opportunity to standardize part of their processes, get extra hands to help them with compliance, free up people to help with the overarching automation processes, and later insource it back into your own operations. So that's an option that I see for the outsourcing part. But you're right, many have already gone through these phases.
Yeah, good point. Excellent.
And so when we think about, again, moving through these phases, the top requirements that organizations from SAPinsider, that SAPinsider identified, clean and harmonized master data was number one. This was followed by seamless data management across order to cash, procure to pay, and record to report flows, and then identifying and having a single source of truth for visibility across transactional data and business activity for reporting and audit processes. So these were the top three in terms of the requirements that organizations were stressing with regards to their global tax management strategy and approach.
And I know it's the internal.
Michael, go ahead.
Yeah, it's just the everlasting struggle that tax has for these things, and there's no, unfortunately, there's no quick solution to try and to solve these, at least immediately. As you can see, the numbers are still really high for those first couple, even three items there. So I think what it, more than anything, it gets back to kind of one thing that I've talked about in the past is the future for tax departments really has to be what I call the self-serve model. And at some point, I think to solve this problem, they have to be able to take whatever finance is going to give them in terms of data, and they're actually going to have to work with it themselves in their own tax environment. They're doing it today, but they're going to have to do it more. And I think some of these things you can see with S/4HANA and some other tools can really help with that thing. But I think this is a struggle for the tax department, and they can solve it, but they're going to have to go to what I say this self-serve model in order to kind of move this data into an area where they can actually do their reporting. That's what we've kind of seen where companies have actually been kind of successful with that. So.
Yeah. And I'm actually pretty happy with the level of awareness around, let's say, the seamless data management requirement, because if you look at, let's say, traditional data management and specifically focusing on errors, that was basically an issue for the reporting people. They had this pot of data, they had to consolidate it into a tax return. They came to the conclusion, well, there are some errors. And then basically sales and procurement people didn't bother too much about the sanity of data for tax purposes. And now, while making it seamless, you basically make it an integrated process and make it possible to allocate the responsibility for that data also where it belongs, because reporting people do not own the order to cash or the procure to pay data. They only process that data. So it's an excellent development, and I fully agree with that being a top requirement.
That's great to see, and you can see that our community is addressing that requirement and seeing that as a vital priority in terms of the increase in importance. So if we look at where organizations have already adopted and made investments, again, we see that in terms of this year, our audience sales and use tax determination tool is still number one, but decreased in importance. And that likely has to do with maybe some of the different audience that are taking the survey with, year over year variance. And in terms of tax control framework, we see that this is increasing where organizations are the ones that are in our community taking the survey. They seem to have made more investments in this area. followed by top tax localization tools, as well as audit management software. And this aligns with some of the earlier assessments and insights that we talked about in previous slides. I wonder if you guys have any comments here.
Yeah, I'm of course, I'm sad by the global tax engine being at the very bottom of the results, which is of course obvious. I look more at, let's say, the global and not to the US. So right. This is a true reflection of still tax engines being high on the radar in the US, while still, let's say, heavily under investigation, but not really deployed already in the rest of the world. This is, of course, not what we hear from our customers, but that's a biased view because they're already looking at tax automation. So that's, room for improvement.
Right. And I think, too, we recognize that in the initial slides with regards to pain points, right? Integration of tax engines was a challenge. And what we'll see in the subsequent slides is the demand for integrating the global tax engine is still very robust. And so obviously there's a gap here that we hope to, that we've uncovered and maybe requires additional information and insight around successful implementations here.
And maybe one of the underlying reasons is that many of the businesses still do not have global integrated tax and finance functions, so solve issues more regionally.
Yeah, this also could be the case as well. I know that within our community, roughly 60-70% of those that respond to our service are still on ECC6. They still have disjointed, landscapes, and so they're still have manual challenges with regards to integrating some of their cash-to-cash systems and what have you. So that may be an impact as well. And so if we move to those technologies that are being implemented, we see that global tax engine, again, in terms of those implementing over the next 12 to 24 months, there's greater interest there, right? There's greater, projects that are ongoing in this area. So I imagine that adoption number will increase next year in this survey. In terms of those currently implementing and implementing tools over the next year to 2 years, Global Indirect Tax Reporting Tool was number 1. RPA of routine tax compliance processes was number 2. And again, a sales and use tax determination tool, number 3. And that tool saw the greatest percentage of those that are implementing within the next year or 2.
Yeah, just one comment here, Ogo. I would say, a lot of these percentages are in a fairly tight range for not just currently implementing, but also as it relates to adopting over the next 12 to 24 months. And so you can see a great deal of emphasis on compliance and getting those things right, getting their reporting right. So actually, this is a pretty encouraging slide. And the percentages as it relates to the issues that are identified on the left-hand side of the graph are very close to what we're kind of seeing in our business. So overall, looks like folks are, as Peter said, looks like folks are aware of what their needs are and they're actually implementing these things. I also had just one other comment about all of the work that you did here and the folks did at SAPinsider. One of the things I feel about this whole presentation and the data that's being presented is the folks on the call should realize that instead of having to go out and benchmark a bunch of different companies, a lot of what's being presented here is actually kind of a benchmark. It is a benchmark kind of survey. So I think, again, I'm a big person of telling the story, making sure that either your CIO or your CFO understands what your funding needs. And a lot of these things are particular areas you can say like, hey, these are other companies are focusing on these as well. And I think that's a really good takeaway from the slides altogether. So wanted to make sure I made that comment.
Much appreciated. And again, that's part of the value here, right? Is understanding where your peers are, where they're investing, how they're investing, where they see opportunities. And so you can be better informed about your potential strategies moving forward. In terms of strategies moving forward, we see that technologies that are being evaluated for global tax management starts with the Universal Journal. And Peter, we had kind of an interesting conversation prior to the start of this webinar about the use of that technology and organizations wanting to align their reporting to, again, enhance their tax management strategies. Maybe just summarize what we talked about, if you could.
Yeah, what you see with the Universal Journal, and Mike, please chime in, is, let's say, an effort within businesses to harmonize their setup of their accounts, so they can more easily report and consolidate the data across the various systems, but also regions where they are operating. One comment that I would like to make with respect to Universal Journal, but also the visualization, and also RPA, actually, that's the low-hanging fruit, basically, that a company can quite easily, let's say, implement and also gradually deploy throughout your business. A global tax engine is much more impactful to implement than RPA tooling that you can grow. So that's also reflected here. People really pick the low-hanging fruit, and of course, CFO priority being the Universal Journal, they pick that first.
Just one comment. Excellent comments, Peter. I would just add one more on the Universal Journal. Obviously, if you're in the transaction tax area, you would probably also want to be working with your colleagues in the tax department that are on the income tax side as well. And because so much of the detail that comes out of transaction tax can be used for transfer pricing purposes, that's the reason that a lot of companies are focused on that now, because it actually helps in their transfer pricing reporting. And so that's why there's a big focus on that. I think it's not impossible to conquer, but it is something that does take a lot of work. And if you're actually going to take that on, you probably need a really great partnership from internal audit, definitely from accounting, and probably a lot of folks who are tied to your finance, to your international financial planning. So that would be the comment I'd have there.
No, that's very insightful and helpful for our community. And when we think about, again, our organizations and where they're looking to make investments and improvements with regards to their global tax strategy, we see a greater emphasis on cloud-based deployments for tax. We see that, again, those that are currently implementing, and that's the one that catches my eye, those that are currently implementing cloud-based systems, we saw a huge jump this year, right? And I know we've all been talking about the benefits of cloud and the value to organizations, but here we're seeing it reflected in our survey for the first time this year.
Yeah, just a comment there, I guess. In some ways, the movement to the cloud, it's kind of two things for a lot of companies, at least what we're seeing. One, it's just a generational shift. You see a lot of chief information officers, kind of like baby boomer age type folks who are exiting the workforce, and you have a newer or younger generation that's coming in, and they're very comfortable with moving things to the cloud, or they feel like they just don't want to support a data center or a lot of hardware or just the upkeep of things around on-prem, serve an on-prem environment. So they're much more comfortable in doing that, and the security that goes, that they feel that actually has been achieved and is going along with that. I would say just one comment to the far right on this column, you'll see where there's a number of companies that have no plans to move to the cloud. That doesn't mean they haven't evaluated or they haven't, really kind of thought deeply about what might be the savings for them. But normally when we see folks like that who have no interest in moving to the cloud, they're generally in the utility space. It could be water or power or sewer or telecommunications, where they're running these long series of transactions that are fairly standard, and they like their ERP system and everything that goes along with it. So they're not going to actually move to that. And then there's just everybody else in the middle who is trying to evaluate about what they want to do. We do see a lot of people, both in the IT and the tax departments, who, they have their own reasons for do that. And so I would just say your movement to the cloud is kind of an individual thing for you, and you can benchmark all you want, but you're going to have to build it around what your business is. I don't know, Peter, if you had any thoughts on this slide.
No, that's spot on, Mike. I don't have anything to add.
Okay.
So, no, thank you for that, Michael. And then Peter, maybe you can speak to this next slide. And again, this is one that I'm glad and happy to see that within our community, the SAPinsider finance community, there's greater recognition of the importance of having tax experts and professionals at the table as organizations move towards their strategy and planning around ERP adoption, specifically for this community, SAP S/4HANA. So you see, again, greater collaboration with tax experts in the planning, implementation, testing, evaluation, and to the far right, you see that those that have no plans to collaborate with tax professionals, you see a decrease there. So all around, again, I think positive steps are being made in this area to understand the importance of having tax teams at the table.
Yeah, absolutely. This is basically an evergreen for tax being at the table, especially with IT, because traditionally tax speaks a lot with finance. Sometimes are even part of the finance function as a larger group. IT is a different group. So the connections are apparently better established right now, according to these results. So I'm happy with that. And this could be basically for two reasons, from my perspective. So either just objectively the value of tax, the added value of tax in those discussions in the planning, implementation, and the other steps is just more valued by the IT and the finance function. Or, and that could also very well be the case, finance and IT have experienced in past projects that tax was a serious blocker at the end of a project because of non-compliance. And then the learning curve starts, and they want to include tax to avoid that in future steps. But it's a very good development.
Right, and also again, it speaks to the strategic nature of the tax team and its involvement in steering a company and organization. It also speaks to the fact that tax teams are the biggest consumers of data at this point, right? So in terms of all the data within a corporate organization that is traversed, tax teams are seeing it all, and so they need to be at the table working with IT, as Peter mentioned.
Yeah.
And in terms of projected budget for specifically global indirect tax compliance, we see that really just steady for within our community. Again, organizations that are seeing a larger budget year over year increased from 12% to 20%. In terms of those that stated there would be no projected change, that was relatively the same. And in terms of those respondents that said they had smaller budgets, we saw a slight decrease. And so in general, I would say we're having slight positive green shoots here with regards to the investments organizations, specifically SAPinsiders, are making in their indirect tax compliance approaches. And if we move to the role of shared services, again, we see that there's a greater evaluation within our community of the role of shared services with regards to global tax management approach and strategy. So again, just an area that we're seeing greater importance, whether that's reflected in the actual strategy, that's yet to be seen, but we're seeing those organizations are taking more consideration of this area. In terms of top metrics for measuring performance of your global tax management processes, we see that tax returns filed timely, number one again. And again, if we look at the top three, following tax returns filed timely, we have penalties and interest charged due to tax audits. We have a number of tax corrections from audits. These have consistently remained the number, within the top KPIs with regards to how organizations are measuring their process and performance. Error rate is an area or is a KPI that we see decreasing focus and attention. And again, I'd love for Peter and Michael to just maybe speak to why that may be the case.
Yeah, I think I'll go. What I'm looking at here, the first ones from left to right, is obviously those are all quantitatively driven, right? I mean, they're all numbers, and those are very, very common KPIs, just so all the folks on the call know that. So, but there's also a qualitative aspect to it, and it really kind of goes to the fourth from the left, which is the number of employees required to actually do all of this compliance. I've always felt like the number of employees is not really a relevant measure. And I think if you get trapped in that conversation, and I do consider it a kind of a trap with either the folks above you who are doing funding or the CFO or whoever it is, I think what you should really be, that story should be, is just the quality of what's going out and the fact that you're using the best tools to actually do that. And if you're in the tax department, a lot of times, Peter alluded to this earlier, sometimes you may be on the short end a lot of times of the funding aspect of that. And so if you want the first three to actually achieve those, you really have to have people who are very adept at running your systems, but you have to have the best tools and you have to continue to improve on that. So while these KPIs are very, common, also focus on the quality of the people that you have to have, less automation, and also, just the overall good reporting structure that you're going to achieve through all of this. So those would be some comments there.
Yeah, I fully agree.
Peter, I don't know if you've got anything.
I want one additional. You already referred to the tools that are needed to basically monitor the level of compliance. One thing that I feel we should add is that the tax department should also have the mandate to implement changes. So, for example, tax should have a say in not everything, but the master data management, for example, and should basically also be allowed to have specific master data that's relevant for tax, to have that changed without any significant discussions.
Yeah.
What we see moving forward, right, if we look at, again, where benchmarking organizations, SAP organizations, with regards to these KPIs, we see that, again, error rate is one where organizations feel they are performing better, as 20% feel they're in the top 20 of their respective peers with regards to that KPI and that performance measure. Where we see some slight challenges or slight decreases is tax returns filed on time, right? So in 2021, 30% or 29% of organizations felt they were in the top 20% in this performance measure. That dropped to 23% in 2023. We see that. We see that that's an area where organizations may feel they are not as strong, or maybe requires more investment there. Any thoughts with regards to just how organizations feel they are representing themselves with regards to these KPIs?
Now, I was looking at this data and thinking about it, and I was struggling with the overall concept. And let me explain why. It's good to measure performance against industry counterparts and assess, let's say, the quality level of your tax processes. But on the other hand, each business has its unique context, level of complexity, ERP landscapes differ, business and supply chain models differ, the risk appetite of businesses differ, finance processes are different across numerous businesses, and also the tools that the tax function has available significantly differ per business. That has already been reflected in the data as well. So why I'm struggling with the numbers is that I feel that that these numbers are actually more, and that's my opinion, a reflection of gut feeling and desires of the persons interviewed, rather than that are hard numbers that are really comparable matrix against industry counterparts.
Right. And again, these are self-assessments. So you're spot on in terms of, again, really the respondents identifying how their organizations feel, where they feel their teams are with regards to these performance measures. I think where there's opportunity within this data set is if we can break down, for example, into specific industries, right? And maybe that's a follow-on topic of conversation next time, Peter, between you and I, where we can look at different industries and maybe reflect on how they're addressing their various performance measures and benchmarking against their industry peers rather than the general audience.
Yeah, but maybe Mike has a different perception. We come from different backgrounds, so we all bring our bias, especially to this slide. So.
Yeah, one thing that's probably not in here, but it's kind of embedded in their self-assessments, is you also don't know what kind of legal positions actually some companies are taking as it relates to the collection or remittance of that or sales and use tax. So if there are corrections, they could be data-driven, they could be legal positions. It's just there's a number of things that can kind of lead to all of that. And so I fully agree with Peter that everybody's unique. And the one thing I would say is, as it relates to tools, back to tools again, is tax departments are very, very good at kind of stringing things together and making their compliance systems work and trying to get them as less manual as possible. But I would say this, that the real thing you need to kind of look at is to see how much of that is actually going on. And then the second thing I would say too, and I don't know if we've touched on this yet, Ogo, is a lot of times you need to, whoever it's in IT or tax, you really need to assess your tools and what they're fully capable of. So if you have an issue, one of the first things we always had when I was in industry, we would always look at our tools and say, gosh, has a software vendor already solved for this problem? Is there some module we haven't put in? Is there some update that we haven't made that is creating these errors, at least on, within our environment? And that would be a place where I would say, check that and make sure you fully understand what all of these systems are capable of doing.
And to follow on, I know that within our research, not only within tax, but other core finance processes, organizations are struggling to maximize all the tools available to them. And it's important to work with partners like yourself to make sure that the tool set that you do have are being optimized to their fullest capabilities, and you're not leaving investments on the table with regards to your current technology landscape. So I think that Michael, what you talk about is spot on, and key takeaway that organizations and those on those attending can appreciate. So if we move to now let's move to questions, right? And so what we I can come off sharing so that it's more interactive with regards to, and so what we do is we have questions that were sent in by our audience prior to this webinar, and I will just read a couple and give us a chance to respond and provide some insights there. So the first question that we had really spoke to the risks that organizations face with regards to the current digital tax administration and how that impacts their indirect tax compliance approach. So maybe if we could talk about, again, just the current trends that we're seeing in digital tax administration and the risks that organizations face, and what are the opportunities for addressing them? What are the strategies that maybe weren't shared in the survey that we want to share with the audience?
Peter, did you want to start, or?
Yeah, in many of the conversations that I've had in the past year and a half, for me, actually, the number one risk, and that's also related to the outcomes of the survey, the number one risk is that tax administrations, by implementing real-time reporting, e-invoicing, and gathering all this data, I typically refer to it as data harvesting by the tax administration. The risk is that tax administrations pretty soon know more about what's going on in a business than the tax department within that business. And I see that as a huge risk. Because then, yeah, basically every assessment is out in the open. So that's maybe, Mike, you see any additional risks?
Yeah, I think one of the things that that I think the corporate community has to be a little bit more responsible on is actually challenging tax administrations around the things that they're implementing. So for example, for real-time reporting or near-time reporting, obviously that is driven by a number of factors. Fraud, the ability to actually drive that out of the system to make sure that they have access to the data and everything. But there's a huge cost to the community to doing all of those things. And I think in the future, and we've always done this when we were industry, I know you did this as well, Peter, is you really need to think about either joining coalitions or being very, very thoughtful and vocal about when these new kind of regimes come up as to what are governments trying to achieve, and is this the most efficient way to do it? Because certainly in the transaction tax area, the corporate community bears the cost of all these things enormously, and we don't get compensated for it. There might be, some small compensation, there's at least in the US for collecting sales tax, but generally not, that isn't the case. And so I think the trends will going forward is, at least in the States, you're not going to see real-time or near-time reporting. They don't believe that there's a reason for that. They believe compliance is fairly heavily done. I think the risk, though, for us is to continue to monitor new forms of transactions, NFTs, cryptocurrencies, and to make sure that we have a voice around that so that we're educating the government before they actually propose a solution around how they might either tax those or in the way it should be taxed. That's what I would say to folks.
Great, thank you for that. As a follow-on question, and picking back on the earlier theme that we discussed in some of the early slides, the transformation of tax and finance. Again, as I've mentioned, about 60% of our organizations are still on ECC6, and there's still, there's end of maintenance approaching or what have you. So those organizations that are still on the sidelines, still planning, still taking their time around the transformation of finance and tax, I wonder if there's a story to tell with regards to the ROI that transforming tax can provide, and whether that's one that we can share or discuss, or any opportunities there, because I know organizations really, especially tax leaders, they really want to align their transformation with the S/4HANA transformation budget. And so ROI, sharing that ROI, providing that investment case is a strong opportunity. What are your thoughts, and how can tax leaders best convey that?
Sure. Well, I guess I can take it first, then Peter, if you've got some thoughts. You have to remember too that, and I'm pretty sensitive to this, that you're trying to replace systems that probably be in place for like the last 30 or 40 years, or maybe the last 20. And so it's not a simple lift and shift. That's something that a lot of people understand, that there's significant investment. And I think what happens is it takes people away in finance groups, it takes away from the day job, because you have to assign somebody to these transformational type of systems that are being implemented that's actually going to follow everything, and that it takes a lot of funding to do that. But what I would say is the customers who have made the change and made the journey, they've done it in a best practices type of way. They've done a very good scoping of what their current systems are. where they want to go, how they want to accelerate e-commerce, and they understand that these new systems actually fit better in their overall businesses. And so then the ones who have made the change have generally been driven from the top, not from the middle part of the organization in finance. It's generally the chief information officer or it's the CFO or somebody like that. And so what I would say, those who haven't made the shift yet have probably need to tax, AP, AR, investment relations. If you don't have a group of you today kind of assessing those things, you really should be putting that together and making recommendations to upper management, because they certainly understand and see the numbers associated with it, but they don't always understand the qualitative piece that's going to come out from making the shift to these new systems. So I would say that would be one thing I would encourage folks and companies to be doing. I don't know, Peter, if you've got some other thoughts around that or not.
Yeah, one of the things, and we have discussed that because it's a common theme. If you look at a compliance process, also in transaction tax, actually the true cost of compliance within your current environment, within your current processes, is not known in most organizations. So we tend to call it the hidden cost of compliance. And in order to basically better understand this hidden cost of compliance, what does it actually take to be compliant globally for an organization? That's not an overnight task that you do. So you need to prepare, investigate, well, okay, how much does changes in current IT systems cost if legislation changes? For example, a simple rate change, how much effort does that take? And what's the finance attached to it? How many external IT resources do we actually use to manage our ERP from a tax perspective? How much costs do we make internally and externally to keep our tax content, our rates and rules within the system up to date? And that helps, having those numbers helps in preparing, let's say, the business case and the arguments for tax engines or improvements that you need. So preparation is key.
Well, it's very insightful and very helpful for our audience. I know this is a major challenge for SAPinsider organizations. Unfortunately, that is all the time we have for today. I would love to thank Peter and Michael for joining. Your insights were, we're second to none, and I know our audience, SAPinsider Finance audience, will benefit greatly from your involvement here today. If we did not get to your question, please follow up within the next few business days, and I'll be happy to respond or forward the question on to Michael or Peter. Thank you for your attendance today. Shortly after the live event, you will receive an email reminder to access the presentation, as well as the on-demand viewing of this webinar, as well as today's slides. On behalf of SAPinsider and our sponsor, Vertex, thank you and have a great day.